back like this.
All right. Well, thank you very much for that introduction. And the title of our session here is "The Future of Trading, Finance, and Distribution." And I'm Paul Miller. I'm the Chief Science Officer at AgriWorld, and I'm really looking forward to this panel. I was asked to moderate it. I'm obviously completely addicted to data. In my process, I've been the victim of many Excel storage media issues to be able to actually do something realistic with data. So I'm really happy to talk through this and kind of introduce this. But for to open this up, I'd like to just have each panelist go through, describe your role that your company plays in the supply chain and marketplace, and what disruptive plans are you trying to make a reality.
Use the GrainChain.
So I'm Kellee James. I am the co-founder and CEO of a company called Mercaris. We are a market information service on one hand, and then an online electronic trading platform on the other for identity preserved ag commodities. In our early days, that's mostly meant organic and non-GMO, but it can mean grass-fed, biolic, you name it, that IP trait that makes the supply, demand, price behave differently than its conventional counterpart. That's what we track, produce information on. I would say the disruptive part of what we're doing, we've talked, a lot of the panelists in the audience has talked about the sort of intersection of these sort of specialty niche commodities with the larger ag world. What we found was that these commodities have some of the same challenges or opportunities. So price discovery, risk management, anything that goes along with business planning, and the fundamental need for all of that is price and information data. Before you can make a good old-fashioned project finance loan, or before you can take an equity position, it's good to understand what the underlying asset is doing, and that's what we help do. I will also say that we're well into the information age now, and it is a hard sell sometimes to get people to say, data transparency, it's a scary thing, it's a good thing. I'm an economist by training. The only people who love perfect competition are economists. Nobody else really wants, and I'm even with my own company. I want competition for everyone else, but maybe not for what I'm doing. So trying to show and demonstrate the benefit that type of radical transparency, as we're talking about, can have to your own business continues to be a way, something that we need to do a better job of, I think. So I'll stop there.
Lewis?
Hi, I'm Macias. I'm the CEO of GrainChain, and what we're doing is being able to take a seed from the ground after it's harvested and provide secure and instant payment as soon as it hits the scale. Giving farmers the ability not only to create absolutely secure contracts that are governed by actual machines that read what's coming in and what's going out, but giving them the security of knowing that they're not going to have to deal with slow pay, and giving them the ability to be able to do contracts with people they've never done in the past. Kind of narrowing the divide that comes with the price gap that a grower has today, and giving them that ability to deal with not only buyers that are global or even local within the region, and the security of knowing we can actually do business with them. Using the distributed ledger technology like blockchain and the governance systems that we've had in the market to leverage not only the data, the contracts, and all of the activity going within each of the parties. I think our disruptive part of agriculture is kind of changing the way they do business, is giving a farmer a lot more confidence not only to do business, but also giving the buyers and all of the people, the banks and all of the other people within the industry, the clarity of what's going on.
Mark Pryor from the scene. This is interesting because when we formed the company in the year 2000, we disrupted the way cotton was traded. So that's something that's just kind of interesting, and we're going back again with the same players that you all know. If you say your ABCDs, then you see that this is disruption 2.0 really for us. But going back, we created the company in the year 2000. About the time the internet got exciting, everyone was interested. And the competitors in agriculture came around and joined us at the table and said, we see this internet thing being more than a brochure, online brochure for our companies. We see this being very important to global trade. And so they formed the scene, and we've traded tens of millions of bales of cotton. It's unbelievable the other commodities that we've traded. And we're looking at this as the next wave. So with blockchain technology, we'll have the critical mass that I think is needed to make this happen. You need broad adoption in technologies. And by having Cargill and Louis Dreyfus and Mallory Alexander and other companies to be a part of this, backed with 18 years of proven experience in commodity trade and cloud-based services and cloud-based trading, then I think you can do a lot of interesting things. So our disruption is going to be disruption 2.0 for agriculture and cotton trading initially, with blockchain assisting in trade finance and the export market.
Great. So, the future may be specialization, not commodity. And, how does this new technology affect global markets in general if the world is trending towards specialization? How can your companies help with that process? It's been a topic in conversation here, and I'm very interested in how the distribution of technology that you guys have can really work in that specialization mode.
Sure. Yeah,
I'm an engineer, so I just go 1, 2, 3, 1, 2, 3 until somebody stops. Or the system breaks down and there's an alien invasion zone. Please.
We'll see which happens first. So yeah, I mean, just to be clear, when we look at whatever qualifier you want, these are niche, but they're still commodities. Meaning the definition of I can deliver a load of high oleic soybeans to you. They're still interchangeable. It just happens to be a notional value of the market is a little bit smaller, much smaller in some cases than the larger markets. So they're still commodity markets. They still obey the laws of supply and demand. That, for us at least, in our model, hasn't changed. What has changed is when markets are thinner, when markets are developing, when you have risks like climate change and disease and all the things that we all deal with in agriculture, is you have price volatility. And you have, in this case, in our case, opaque markets. So whereas people are out there transacting and buying and selling amongst themselves contracts for delivery of organic feed grade corn, we're saying two things. One is you can improve liquidity by bringing it onto an exchange, onto a platform. And so the bid-ask spread, these wide spreads or prices, you can't match up. The supply and demand don't seem to quite match up for whatever reason. That's what we're trying to solve, and that's I'd be interested to hear. We have not yet made a foray into blockchain. There are a couple of sort of maybe use cases that I would say for organic that we can talk about as we get into the panel. One is fraud, and for anything where you're trying to preserve something or you need to have traceability and you need the every link in the supply chain to understand what's actually going on. I think there's some opportunities in blockchain. I also think there's some limitations. So I would say when you're modeling information, how do you solve the sort of, for lack of a better word, in statistics we would say garbage in, garbage out. So yes, the blockchain can show you that this particular event has been verified by the sort of broader community, but what if someone entered in, humans, we can be very creative, but when it comes to ag, what's the good old fashioned, I just substituted something in that I sprayed a pesticide on, and now everyone in the chain has verified that this has happened, but how do I know that it's, how do I bridge the physical world with the virtual world, basically? So that's one, and then payments is the other. So as these supply chains get longer and stretched, like how do you know you're going to get paid? So we're always looking to incorporate that. Right now, we use other technologies to accomplish that. So it'd be good to hear, how those have been applied in some real world situations.
Yeah. So blockchain is not a miracle worker. Just because you add the word blockchain to something doesn't mean it's going to work. It doesn't mean it's going to be the absolute solution. One of the benefits and crazy byproducts that we've come out of being in the market for a couple of years and having so many seasons within our system operating is we've tried to remove the ability for people to enter the information into our data. we've tried to eliminate the ability for the farmer to enter in this information. And the way that we've accomplished this is our governance systems are talking to devices and directly connecting to individual suppliers to be able to fulfill a lot of this data. And what that gives us is we are on the finance side and on the receiving end, but we are able to capture a lot of the data. For example, a certain farmer is planting lot A. At the beginning of the season, he puts into the governance system the seed and the fertilizer or non-fertilizer what he's going to use. That's also verified with the actual vendor that allows all of that to kind of work together. As the seed is coming in, we're absorbing the lot, the seed, the fertilizer, even, depending on farmer participation, the water tables, et cetera, of what we're using. We're able to capture this data and take it along the actual payment chain of the transaction. So we're able to see the tanks that they go in, the actual trucks that move it, and the final facilities. Some of our use cases actually go from the field all the way to the consumer, and we're able to give that information. The reality is that it's only as good as the inputs, and it's only as good as how much we can enforce it. I can have 1,000 computers tell me that everything they inputted is correct, but that doesn't mean it is correct. So what we're doing is we're relying on actual machines and verifying data to give us that information. We're also securing that data and securing the transactions by not only writing it to a ledger where both parties have access to, but other parties and auditing parties have access to it. So long story short, blockchain is not going to be the end-all solution for everything. There has to be a lot of supporting devices and technology and actors that come within it. We provide a lot of incentive to our farmers to be able to input the data and give them back yield data information reports and actual result reports that they can use to market their grains. But at the end of the day, it's going to come down to how much they're going to interact. And when they see that their partners are allowing their data to interact with our chain and allowing the vendors to interact and allowing for the devices to interact, and that their corn is being marketed at a higher level, then they're going to want to play the game too. So as adoption grows, you're going to start seeing farmers understand that it's not just about transparency, it's not just about being able to interact in something cool called a blockchain, it's about having an actual title that shows everything from point A to point Z and the benefits that they can receive from that. I'm not sure that we're at the point right now where we're going to get massive premiums for that data, but as it goes on, you're going to get better contracts more and more often.
You're cutting out cost in the supply chain, which what does the farmer benefit from? You've cut out cost in the supply chain. So therefore you would think that the farmer gets more money, but you also have the specialty, to your point of specialty crops. In cotton we have Sabima cotton, and it's used for high quality shirts and sheets and things like that. And if you put that badge of this is Sabima cotton on the clothing, Brooks Brothers is a big supporter, you have to be able to verify that. So I think it commands a premium, but it's also verifiable. In the world of peanuts, you have certain varieties that you also have that specialty crop that plays a big role. But you're right, garbage in, garbage out, and in the blockchain world, we are looking as well as Lewis to take this data from the most pure source that you can get it. In our case, we're working with the USDA, and they class every single bale of cotton in the country. We're working with the peanut industry, who does the verification and classing of every load of peanuts that goes in. And so we want to take it from those sources and reduce the manual input so that you have pure information that's coming to you.
Well, the one question I wanted to ask related to that is kind of what do you all think about, folks that are operating in the supply chain that are actually paying growers directly? There are a number of companies that Agrible works with that are actually contracting with growers, but I actually think that they favor longer lead times for payment and other kinds of things. And this is a very fundamentally disruptive technology for them, I would say. What are your thoughts on that process?
I'll answer. You're right. There are businesses that are out there that don't really want any efficiency in the supply chain because they like to float. There's businesses out there that quicker payment is not something they're very interested in. But I think there's going to be more benefits, and the market will drive them to begin adopting that. But you're absolutely right. Quick payment is one that you got to look at, and it's a challenge to get adoption in those areas where that's become a business in that area.
Sure, and this is something we've run into because what we're promising is instant and secure payment, and what we're finding is that a farmer can work with a float if it's programmed. You know, a farmer can say, you know what, I understand that you need 15 days to pay me and I can wait for 15 days, but I need that money on that 15th day. The biggest problem that I see is that that's not what you're getting. A lot of the people who are trying to float, you know, the 15 day turns into 30 or 17, and farmers during harvest, we all know, you know, the urgency of the money the day that it is promised is very important. What we're also looking at being able to leverage blockchain in participating with financial institutions is the fact is if a financial institution knows that this is the deliveries are secured and that the finance is secured, they're willing to lend money and leverage money a little more when they know they're going to be first payee. So if we can write all of this into a smart contract and say when farmer A delivers, and buyer C gets his product, the transaction is done. We pay farmer A instantly, and we know we're going to get this money in 15 days, and this payment is going to go. Farmer A can't grab the money and write a check a little bit later. What that allows for is much more increased financing. When we did our contracts with the participating banks within our system, their biggest idea was, well, now I can lend this farmer a little more money because I know this farmer usually takes his time to pay me. Sometimes it's his, but if I'm first payee, then that money can come in. If I'm first payee on this, then I can lend them an extra $100,000 this season, and they can do a little bit more. I think that we leverage where we can, we give instant payment where we can, and we provide creative solutions for the situations where financing is not an option for emerging markets. We give them the ability to pay a little bits at a time on a program basis where we know the money's there and delivery is made when it comes in.
Yeah, I mean, I'd say we've seen all sorts of variations. I mean, sometimes we've had the growers not wanting to be paid because of tax reasons. You know, we're wanting to be paid at a certain time. I should say not wanting to be paid. But so there's all sorts of reasons on both sides for why you might want something that's not quite maybe what it appears on the surface. But the other part of contracting directly with growers is that it doesn't necessarily get around the central problem of like what's a fair price. And so this sort of negotiated one-on-one, there's all sorts of techniques that the markets have evolved. I mean, we've seen where you can't look to, let's say, a Chicago market or a New York market. And we've seen things like, you know, very sophisticated growers and buyers keep doing test plots so they can kind of track input prices and kind of know what their costs are. You know, really smart farmers, good businessmen and women who can tell you that, and then they build in a margin on top of that. You know, this sort of cost plus contracting, that's pretty common. As we get into forward contracting, so if you want something special and you want the grower to grow to your specification, no matter what that is, you're talking about forward contracting, you're talking about a planning process. And so again, you've got to now account for everything from, you know, perhaps the time value of money or, you know, carry costs. There's a whole lot of things that have to be built in. So that process of arriving at a price can be, you know, deceptively complex, to say nothing of the fact of what is the underlying commodity actually worth with some of these new markets. It's, you know, it's harder to determine. So, so enabling, you know, again, I'll sound like a broken record, but providing price signals allows people to take that information and apply it to no matter what type of creative, specialized contracting that arrangement they're doing, whether it's direct to grower or something, you know, some other variation.
Great. Well, this is an incredible panel. The panel is fantastic. The moderation is amazing. But I have many questions that I'd like to ask, and we have 16 minutes, so I'll ask one more. You know, as a company, Agribul is really one of the reasons why we wanted to start Agribul in the beginning was we want to be able to predict yields, qualities, and other kinds of things, and we're really concerned about being able to understand and really work through issues of food security on a global scale. And our entire compute infrastructure relates to that. We've been talking about financial markets, we've been talking about all these disruptive technologies. What do you think, if everybody has access to the same information and it's in real time or predictive in a lot of ways, how will that affect food security in general? for everybody participating in agriculture?
Good question. If you read, pick up the Wall Street Journal, we do have this food safety concern with lettuce and some of the recalls there. And you also hear about some initiatives to stick with the blockchain thing from IBM and the way they're able to trace mangoes. And something that took 6 weeks to trace back to the origin for a pallet of mangoes now takes 6 seconds. That kind of technology and capability is only powered by these new innovations, and I think it brings enormous promise to what we're doing in food safety.
Yeah, and I think that the concept of not wanting to share data is a little misconstrued. I think that most farmers are in a community. Most farmers want to help each other. The idea that farmers want to hold on to their yield data and hold on to their origin data is to me a little bit foreign. You know, when I've spoken to large panels of farmers in our area, they just want to figure out how to help each other and how to survive till tomorrow. So the reality is, I see systems like ours or like our panelists here being able to share a lot of this data to be able to have one end result. I met with the Hyperledger team as far as food traceability, and the stuff they're doing in Europe right now is astonishing. They're working with the actual supermarkets, the growers, and everyone in between, and providing a lot of tools to be able to not only show where it's going, how it's going, or where the fault lines occurred. And I think that if we don't grasp all of this data with the amount of food we're going to have to produce in the next 20 years and the type of movement in the food, we're going to fail dramatically. So I think, grabbing a lot of this and being able to share it is probably not just a feature, but a necessity.
Yeah, I mean, food security is such a big topic, and as is usually the case, a complex subject means, complex, reasons for either success or failure. I think finance is a component of that. So, many in this room are doing the hard work of growing the food, or you've got an infrastructure play, you're in logistics, you're in research. Finance is like the cartilage between the bone. So no matter what part of innovation chain you sit at, finance in its best and in its best form, it is directing capital to its highest and best use. Now, highest and best use is up for interpretation. But I think that overall, and that role that it plays in food security is that the sort of grease that makes things go. It's terrible reading about situations where food insecurity is driven not by, let's say, even a weather event, but it's driven by, someone doesn't have enough money to get the truck on the road and the food sits there and spoils. So that, I think in that way, finance has a big role to play in food security.
Yeah, I agree, and I think these technologies will be fundamental if we all can agree what the truth of things is, or at least argue about the truth of these things, then we can actually improve what's happening in the future. So I'd like to open it up for questions for the audience. We have about 12 minutes left on the clock here.
Yes,
do we want, is there a microphone that we want to use for this?
You have to pretend like you're on an old trading floor and shout.
so I have a question about, sure. You mentioned this, Kellee, and you were talking about this in your blockchain presentation. You said junk in, junk out. So
I'll start over. So Kellee, you mentioned this in your discussion. You said junk in, junk out. And in Mark, you had mentioned when you were talking about blockchain, the whole idea is that you're going to have truth. What if you're all the way down to the end of that blockchain or wherever you are, and someone who put something in was not true? You had a bad actor. How do you fix that?
Good question. The technology is meant to eliminate the bad actors, but you can't avoid the bad input to the beginning. And it may happen. I mean, mistakes happen. And I would say similar to what would happen if there was a transaction with your bank that was wrong. You don't go and change that transaction because it happened in the past, right? It happened. It was bad. Somebody miskeyed something, and so they have an offsetting transaction for that. They don't just delete it or erase it. It did happen. Someone else may have done it, but now you have something that offsets it. And I think that's where a lot of people are looking at this immutability nature of the blockchain, saying, "Whoa, we're all humans here, and well, not all of us, but some of us in this supply chain, are entering information, and it could mess up, and how do you avoid that? And that's the best answer I would have, is think about your bank accounts. If you go to the teller and they make a mistake, they don't delete it as if it never happened. It did happen. They just have an offsetting transaction. But data purity is absolutely critical. And as Lewis was saying, if you can minimize the sources of data that you get from and avoid the individual businesses that may be inputting the data, you'll have much more high quality results.
And just the difference between a bank and what we're putting together is that the bank does have the ability to delete that initial transaction. We don't. So the fact that it got written into stone and we fixed it, we can come back and say this is an error, and we can look at it 10 years from now and say this is what happened. A bank does have the ability to delete that information.
Hey, I want to thank the panelists, and I have, to be complete clarity, I have 2 strikes against me. I'm a producer and a grain merchandiser from my past, so I want to though, I'm extremely excited about the technology. For me, it's all about value proposition, especially as a producer. How do you make sure as you try to create that value stream all the way downstream? Because we heard this morning everybody talked about maybe moving away from the ABCs, the commodity driven market focus. But I really think that if it gets down to the end and all you have is an IP product without the value chain, you haven't created you haven't incentivized the producer, so to speak. And for me, that's what it's all about. I'm a pure capitalist, so I need to be incentivized to make this change. So how are each one of your 3 companies going to make sure you incentivize the producer?
Yeah, I mean, this will get into, all right, so we are not shy about saying we think that, we would never tell anyone how to run their farm or run their business, but if you're going to do something that is IP, you should have the best information available. And then it's up to you to make the decision that, yes, this is something that for my farm, for my particular situation, it makes sense for me to grow a grass-fed, animal, or it makes sense for me to grow a high-oleic bean or an organic soybean. So I will say, this will get into a little bit about what happened this morning when people were talking about consumers and why would anyone pay a higher price? If enough people get into grass-fed, you'll see the laws of supply and demand kick in, and you just won't see the premium will change. I don't, preserving the ability of the grower to make a living, for everyone in the supply chain to make a living, part of it is pulling out transaction costs and lowering costs. The other thing I will say is, this gets into territory we haven't really covered in this panel yet, is the ability to capture the things that previously were externalities. So, for example, if you as a grower are building your soil health and less nitrogen will run off, and I downstream am able to now, continue with my oyster harvest as normal because there's not a dead zone, that's a benefit that I'm getting, but I'm not necessarily paying for unless we figured out a way for the market to communicate a price for that. And so whether it's organic or whether it's paying producers for the best the best smart nitrogen application, I think that the true cost of production systems, we have to find a way to build that into our system. Once that happens, or when that happens, then you get a price that's more reflective of all the value that you're providing, and we should be willing to, we as a society, say we're willing to pay for those benefits, habitat or water use or better farm worker health or what have you. So that's maybe not a very satisfying answer, but that's the way I see this this marketplace evolving.
I think in our situation is you just have to look at how many deals you've left on the table in the last 15 years, 20 years. How many times have you not sold your product to an individual buyer because you weren't sure if you were going to get paid properly or on time? And how many times when you did sell your product, did the money come in so slow that it affected your bottom line? And I think one of the big things that we're trying to provide is the security in the marketplace for that. When you go ahead and offer your product, and we're talking about specialized markets, and you're able to offer your product directly to somebody in Nigeria or Singapore, and you're able to guarantee the transaction, you get a bigger dollar for what you're producing. You're able to eliminate some of the brokers and reduce some of the logistics, and you're able to understand when you're going to get paid and that you're going to get paid no matter what. That, I think, translates into what growers and producers can really change the way they do business. I think that, we talked a little earlier today about the fact that we're getting 15 cents as growers on the dollar for what's coming out. When you start participating in a larger, even larger local marketplace or global marketplace with secured payments and with absolute data guarantee, you're able to say, I'm willing to take a little more risk, but you're taking the financial risk out of it, but I'm willing to sell to these people that I've never sold to in the past. And that's where I think it translates straight into dollars in your pocket as a capitalist.
Excuse me, and thinking about the farmer side, several of the discussions we've had so far, we're talking about sustainable agriculture production, and the farmers out there are probably asking themselves, what's in it for me? What's in it for me? I've got to go through all this. What am I going to get out of it? My margins are thin as it is. And I think it's our responsibility, our being everyone's, I guess, who's here in the audience, to lower the burden of the farmer so that we can together achieve some of these sustainability goals that may bring a higher premium, I guess, to the farmers in the end. They're being asked now to fill out 15-page questionnaires about sustainable production. They're self-assessment questionnaires, and they have to do it for every crop that they produce. It's overwhelming, and I think we have to be able to show that there is a premium, or there's going to be a benefit, either as a whole or individual, for you to go through these exercises that you have on the farm. So it's a challenge, but I think we've got to lower the burden on the farmer so that we can collectively benefit from the initiatives that are out there.
Just 10 seconds. Agriball is we're capitalists, and we help generate revenue for growers through our sustainability. So please participate. Next question, please.
I have a question. About 4 or 5 years ago, there was a scandal on Wall Street of stock dealers selling General Motors. The Wall Street Journal says General Motors is $50. And they make a trade for $52. Okay? So it's actually a fraudulent trade, but what they're trying to do is move the market. Okay? Now, can that be done in the commodity market with soybeans or corn or cotton or whatever, changing hands? Can two thieves get together and manipulate the market in any way?
Well, that's a good question. With cotton and other commodities, there's an electronic warehouse receipt that is the collateral to those goods. So the industry has come together and says this is the instrument that we use to collateralize this trade. And in these newer platforms and markets that's going to be around, there'll be a very similar mechanism to avoid the double sell, if you will, problem that they have in cryptocurrencies or anything else. If I give you a $20 bill, I can't take the same $20 and give it to somebody else. It's between me and you. So there's several things like that we have to look at. You got to look at the bad actors and realize that there's going to